Hey everyone, how's it going? As they say in wonderful South Africa, they should be heading into summertime, right? Or spring at least at this point in time, right? Since it's getting warm over here, it should be getting cooler over there.
Heading into winter, yeah. Pretty soon it will be
All right.
winter.
So I actually missed going live, and welcome to another full, as we call it. Let's go like this. Wonderful winning Wednesdays.
Yeah.
You know, last week I was in sunny San Diego, California, hence the reason why I was unable to join the party. But we wanted to just give you a call and catch up because we made it to April. So, welcome to April. We are now in the second quarter of the year, and there's just a lot that has been going on around all of that. So, welcome to April, everyone.
Another month, another new month. Um, Another way to look at it is that 3 months down, this is the fourth month. It's an opportunity as a business to look back and say, what lessons did I learn in the past 3 months, and what lessons do I want to bring into this new month in order to make sure that my business is sound and I'm hitting the numbers that I had planned to.
Yeah, and inflation is still a worry overall when it comes to the market. I'm seeing from the periodicals that I read that PCE, which is the number that the feds actually like to use, PCE is still high, right? It rose 0.3% from January to February, and it's up again 2.5% year over year. The reason why we always look at that, because although it's not a direct correlation to what's going on, one of the things that we know that small business owners have to worry about is how are they going to finance their working capital that they need in order to be able to run their business. And this is a conversation that we have all the time, but also with Eunice being a real estate agent, that's going to be impactful to that business because that's going to have a direct impact on whether or not home prices, well, mortgages are going to be at an expense level. You know what I'm saying? Because right now, and I believe in the United States, we have a huge problem with affordability, even though NAR actually last month said that the numbers were up just a little bit. I think it was like 2% between January and February on new home sales. It's going to be expensive for the average family to handle that mortgage course. Are you seeing anything on your side, Eunice?
Yeah, I mean, with interest rates, they have pretty much been consistent. You are seeing little decreases, and then one day, it's back to whatever the reduction was, you gain it back. So, you know, and I spoke about this also last week on the call when I was saying, when I had a conversation with one of the lenders, and he was basically saying, this is where typically rates are at. What we had a few years back, the threes and fours, that was not the standard.
Hmm.
So we have to start reteaching our buyers and anybody who's looking to transact that typically this is the standard. If we are to go back, or if we ever go back to those attractive 3-4%, great. However, it's very unlikely. And to sit back and say, I'm waiting for it to hit that 4% again, you might wait quite a while. And I get it, because if you look at the historical data, you will see that historically, where we are now is pretty much the standard.
Well, it goes back to that old expression, you don't wait to buy real estate, you buy real estate and wait. And I love, and I have to get the deck where my colleague Onai, he actually shared a slide last year where he touched on, I believe it was from 1970, and he showed a news article from a magazine for just about every 10 years. So 1970, 1980, 1990, the naught years, 2010, right? In all of those times, it always said that real estate was enormously high. And it's just like if you were to
Mm,
go back to the 1930s, where, an average home that was purchased for what is it, 40 or $50,000, right? Those people would never be in a position where they would say that I'm buying a townhouse where I'm actually sharing at least one wall with somebody for 650,000, $700,000. Of course, that is what the going rate is for where we stay in Northern Virginia. But I'm sure that you could probably go down to Texas or Tennessee or other southern states, and you're probably forking over um, $300,000 or $400,000 for a home purchase. And then at those
mhm,
elevated rates, that means that are you going to be over that 40% that the mortgage company is usually looking for from I don't know, take home perspective of how much of your overall income is going to pay for housing. They don't typically like for it to be over that 30 or 40%. So I don't really know if there is an answer to that, but nonetheless, it is actually a real thing that people are actually dealing with.
yeah. I mean, I think to sum it up, like you just said, you don't wait, you buy real estate and then you wait, right? A lot of people are sitting back and waiting and saying, I'm waiting for this to happen, then I'm going to wait for this to happen. And unfortunately, as you are waiting, prices just don't wait for you as well, right? I was giving an example about my own experiences to a potential client and telling them when we first got into this property, into our home, how much it was, and showing them how much it's worth now, right? And to say, with the gain or the increase in value that the property has attained, to say that the amount of money that I would have saved from being avoiding getting in is way less,
Hmm.
right? So what makes more sense from that perspective? And this is just me throwing out numbers. If right now my property is now valued 150,000 more than what it was when I first got in, right? And what I could have saved by in the 10 years is less than 150. Did I really save from holding back, right? Now I have more that I can do even with this equity because I didn't wait. So sometimes it's a bit, and I think more for me, because I'm a numbers person, that makes more sense. So sometimes it's just about making sure that you identify who you're having the conversation with or who the person is and what makes more sense for them, right? For me, numbers, I'm a numbers person. So when you put numbers down and say, this is where you are, this is where you could have been if you had waited, and I see the differences, it's a no brainer for me.
No, that actually makes a whole lot of sense. And, within our community, we are also educating others who come into our path that the key to financial independence comes with home ownership, right? Because if you look out
Mhm.
over a 10-year period, right, that mortgage is going to be bought down, which is leading to equity. But in addition to having that equity into the home with the mortgage being bought down, I would say that you would want to focus on price appreciation at the same time because the average price appreciation on a home is 2%. However, for those of us who have also experienced 2008, we know that in 2008 that was a down market inside of the cycle, and I believe a lot of people were impacted. I know a lot of people were impacted by that calamity that happened at that point in time, and a lot of people are still leery about it. But one of the things that I could say, because this is a conversation that I have had with a number of different members, the conversation that I have had is that at least the mortgage is going to be somewhat stable, right?
Yeah.
At least the mortgage is going to be somewhat stable because the mortgage is fixed. Now, yes, you're going to have fluctuations in the price that you are paying for property tax, but property tax usually
Mhm.
doesn't swing one way or the other by more than 1%, as well as, when it comes to interest, well, taxes swinging 1%, and insurance payments are going to swing that 1% as well, one way or the other, right? So I think overall, it's truly beneficial to purchase that home. I haven't seen any data, nor has anyone else convinced me that that is a wrong thing to advise. So until I see better data that says go in a different direction, that's what I'm going to stick with.
Yeah.
All right, so we wanted to talk to our community about where things are. Yesterday I think the administration had mentioned that they were going to implement additional tariffs on additional countries that was going to be reciprocal to what they have implemented against us. But one of the things that I'm seeing today is that as I'm looking at the market, and this is probably going to be one of the better reasons why going live at this point in time makes sense, is I'm seeing that the S&P 500 was up. Uh, FXAIX, which I'm also tracking, is green. So there's so much green that is all showing up in the market as a whole. I think it was a good day on Wall Street, but for the most part, what we talk about and what we teach the community is that, you know, right now, you can spend a lot of time in researching different stocks and investments, but I still believe that it's beneficial to just go with some low cost mutual funds such as, FXAIX, FSKAX. Those are the two mutual funds that we are in. But I also learned something that it's if you're using post-tax monies, it's better to go with an ETF versus going in with a mutual funds because when you're going with a mutual fund, you could actually receive a tax bill because those transactions that happen with that after tax money is going to be seen as income or losses. Whereas if you were going with an ETF, right, then you don't have that tax bill. So I was just having a casual conversation with some folks who are in the finance space and know a little bit more about this than me, and I thought that that was a pretty good takeaway.
Mhm.
All right, as we close out, we don't want to keep anyone for too long. We just wanted to let all of our community know that, hey, we are real estate investors, right? But one of the differences that you're going to find with our community is the fact that we want to teach financial freedom, right, in a range of 5 to 7 years, is where we believe the honey spot should be. but not only teaching others that the honey spot is in 5 to 7 years, but you could transition from your traditional 9 to 5 and build a real estate business all on your own, right? You don't have to be in real estate to work with us because VIP Business Credit will support you in any type of business that you are in. We have three main goals that we have, right? It's to get you approved for the highest amounts at lo- the highest amount with the lowest interest rates, right, for the lowest monthly payment that can be there. And since we started this channel, as well as with the additional conversations that I've been having, I find that many small business owners are making a couple of different mistakes. And one of the mistakes that they're making is they are continuing to use personal finances to cover their business expenses, right? If that's if that's the first thing that I would advise against doing is, yeah, you may have to fund your business in the beginning, but that should be a short-term solution. You should eventually be working towards having your business be an entity that can stand on its own, because I think using a book title called Thinking Backwards, right, or working backwards, you have to eventually think that one day you're going to want to sell that business. And that business, if it has finances that are commingled with your personal finances, it's going to impact the value that you're going to be able to get for that business when you go and sell, right? So there's a couple of different reasons why we have seen on our journey it makes sense to separate personal from business finances. And if you scan that QR code that you see up in the top, that'll give you access to our details so that you can learn more about what we know about financing options. There's all different kinds of financing that are available to small business owners, from business revenue financing to equipment financing. We also have some strategies to work with our clients who are looking to get SBA loans. Or if you're in a state like Virginia, there is the Virginia Small Business Financing Authority that actually provides low interest rates to state residents, especially if you are a veteran in this space. So just wanted to come on and share the love, share the joy of another wonderful winning Wednesday with our community. And one of the things that we're going to be doing it now is we're just going to try to get in, share some joy with you, get out. We're not going to be on for too long, except on weeks when we do bring a guest. When we bring in a guest in, we'll try to give that guest a little bit
Yeah.
more time to speak. But Eunice, I'll give you the last word before we check out for today.
No, nothing much to say this week. I think um, we continue calling on other business owners to say we have a platform where we would love to share and have a conversation with you. Walk us through how you started your business, what you have learned, the challenges you faced, and how you overcame them. This allows us to give back to the community. There might be somebody who's listening out there who's maybe thinking about starting a similar business, or there might be someone who has faced the same challenges that you have. And when you go through how you persevered and how you came out of those challenges, that could be encouraging to another person. So as business owners, I believe it's our responsibility as business owners to help each other out. At the end of the day, I believe that we are strong because of small business owners in our communities. And for us, we have to stand together, work together, learn from each other, help each other out to ensure that our communities have sound businesses that not only are benefiting financially, but we could also benefit from just giving back to our communities, whether it's just through a little advice or giving back, but we have to be seen, heard, and seen over in our communities, one way or the other.
All right. Thank you for sharing. Everyone, have a good week. We look forward to seeing you next week on Wednesday. Take care, stay well, and stay
Good
warm.
one.
Be well. Bye for now.
Yep. Bye bye.